All right, let's jump right in. Today, we're looking at a huge investment opportunity, one that's tied to one of India's biggest, most critical infrastructure problems, and a company that might just be perfectly placed to solve it. So, to really get why this is such a big deal, you first have to understand the problem they're trying to solve. India has these massive renewable energy targets, right? But there's a huge roadblock standing in the way.
And here it is, 50 gigawatts. That's how much clean energy is basically stranded right now. Generated, but with no way to get to the people who need it. I mean, think about that. It's an enormous waste, and a problem the government absolutely has to fix. And this is where the story really begins. This massive bottleneck in the grid has kicked off what you could call a supercycle. We're talking about a 9.1 trillion rupee government plan. That's a tidal wave of investment coming over the next decade.
Okay, so who's set to ride this wave? Let's talk about the company at the center of this, Transrail Lighting. And honestly, the best way to see why they're a real contender is just to look at the numbers. They're pretty staggered.
Just look at this. In the first half of fiscal 26 alone, they pulled in over 3,200 crore rupees in revenue. This isn't some small startup, folks. They are already a major player.
But it's not just the size, it's the speed. Check this out, 61% growth year over year. That's just incredible. It shows they can handle this massive demand and scale up fast. And here's the kicker. This isn't just empty growth, it's profitable. Their profit after tax shot up by an even more impressive 84%. So the bigger they get, the more efficient and profitable they become. That's exactly what you want to see.
Now, this is where it gets really interesting. Those numbers are great, but how do they stack up against everyone else? Well, they're not just good, they're best in class. Their EBITDA margin is almost 12%, which is a whole 3 to 5% higher than their competitors. They're just flat out better at making money.
And this isn't just a flash in the pan. They've got a massive order book, nearly 18,000 crore rupees. That gives them a clear line of sight on revenue for almost 3 years. That 2.8x book-to-bill ratio, it just means new orders are flooding in way faster than they can even finish the old ones. It's a great problem to have.
So, the question is, how are they doing this? I mean, numbers like these don't just happen by accident, right? It all comes down to a really smart, deliberate strategy that sets them apart from the competition.
It's really built on these 3 key pillars. First, they control their own manufacturing, which is huge for keeping costs down. That's backward integration. Second, they're not just in India. They're spread out across 15 countries, which helps manage risk. And third, they're smartly moving into related businesses. This is what creates their competitive moat.
Okay, let's zoom out a bit. We've talked about the company, but just how big is the pie they're fighting for? The scale of this supercycle is honestly hard to wrap your head around.
The market opportunity here is just immense. The core business alone is looking at a 13 lakh crore market. And when you tack on the other sectors they're getting into, it balloons to almost 20 lakh crore. That's about $250 billion by 2032, just massive.
And this chart really tells the story perfectly. You see the big guys like Power Grid and L&T. And then you see Transrail with just this tiny 2 to 3% slice. So even with all their success, they've barely scratched the surface. There is so much room for them to grow and grab more market share.
All right, of course, no investment case is complete without a reality check. We have to look at the risks. Every company has challenges, and it's super important to know what they are.
For Transrail, there are a few key things to keep an eye on. You've got working capital, that's a big one. You've got their exposure in politically sensitive places like Bangladesh. Commodity prices are always a factor. And of course, just the sheer challenge of juggling over 50 projects at once. But here's what's really encouraging. Management isn't sitting on their hands. They're actively managing these risks. Take the Bangladesh situation. They saw the instability, and they've slashed their exposure from 14% of their order book all the way down to just 6%. That's smart, proactive management.
So if you're an investor, the #1 thing to watch is working capital. The company says they're aiming to be cash flow positive by the second half of fiscal 26. If they hit that target, it's going to be a huge signal to the market.
Okay, let's bring it all together. When you take the huge macro story, the company's smart strategy, and their proven ability to execute, a really compelling investment thesis starts to take shape.
First, you have the tailwind. This isn't some trend that might or might not happen. This is a massive, decade-long government push to build essential infrastructure. The spending is practically guaranteed. Second, you've got the company's unique playbook.
By controlling their own manufacturing and diversifying their business, they've built a real competitive advantage. It's how they protect those industry-leading profit margins.
And third, the proof is in the pudding. The numbers don't lie. You've got incredible growth, top-tier profitability, and they've only captured a tiny piece of the market. That combination points to a very long runway for growth ahead.
And that really brings us to the core idea here. The opportunity in this sector is just massive. The company's execution is proven. Their strategy is different and, you could argue, better. This isn't just a short-term play. Transrail has the potential to be a long-term compounder, right at the very heart of India's transformation.